Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. It is, what day is it? It's Wednesday. It's Wednesday. Well, guys, markets here. Yesterday, man. Oh my gosh, wait, do I have a rollover today? Bitcoin. All right, that's cool. Let's start that over, shall we? Look, I'm over here. Check it out. All right, guys, it is Wednesday. And we have a really interesting setup here today. What happened in the bonds yesterday was pretty unusual, if I can say it, use that word. And I think that we've got a turbulent 2 days ahead of us. So come over here to the chart. You can see yesterday there was quite a large move up in the Treasury. I'll zoom in here on the Treasury. Quite a large move up. At first, they were very hawkish, based on, people hedging for Jackson Hole, people anticipating that when Chairman Powell speaks at Jackson Hole that he will be very hawkish. But then we had economic numbers. These were economic numbers that normally we don't pay attention to, but they were pretty bad, and that really moved the markets much more strongly than we would have anticipated. But then later in the day, it all came back kind of magically. Now, when I go and I read the news, they just kind of chalk it up to, well, I guess people are still just hedging for Jackson Hole. Maybe. But then the thing that I saw later in the day, I'd say around 2 or 3 o'clock, we got news that Biden will be canceling student debt. So I wonder, were the Treasury markets front running the announcement that Joe Biden was going to cancel $10,000 worth of student debt? Maybe, maybe not. Hard to say. But I think that may be a factor here today. Coming over into the equity markets, they kind of faltered a little bit because of that, although we are still mostly unchanged. Oil is pushing higher. Oil is I mean, man, can you imagine? Could have gotten like 86. We're already 96. I mean, oil is just all over the place. All over the place. Oh, by the way, let's turn on some music, eh? Anyways, oh yeah, I like that. Gold and silver recovering. I mean, they jumped up pretty good on those weak economic numbers here. I should zoom these in a little bit so you can see them a little bit better, yeah? Good jump there. Still not, I mean, we got a long ways to get back to the key 1800 level in gold, and silver's not pushing so much either. I think that silver kind of has a little bit more of a risk proxy element to it, and so you can see that like the risk on sort of side to it is just not there. Then we got Kappa kind of struggling a little bit today. Now, when we come over to the dollar, and I think that the dollar is a really important component of what's been going on lately. I mean, when that economic weakness came in, the dollar really took a hit, but that is recovering as well, but not completely. But man, we're still in the high end of 108. That is awfully high for the dollar, and Bitcoin continues to tread water for the moment. Although I do kind of wonder how long that one can last before somebody gives up and sells on Bitcoin. So that's where we're kind of at here. Nothing too significant on the news front. We did get U.S. durable goods, which came out at 0 versus an expected spot 8, and core durable goods was spot 3 versus expected spot 2. Later today, we get U.S. pending home sales, and we also have a 5-year auction. You think that maybe the 5-year will have more trade and a closer spread? No, probably not. Probably not. At the moment, though, treasuries look very, very negatively tilted. Although they do appear to be running into a bit of a problem at 18.5. I don't see any. I mean, the amount of volume that's traded there ain't too significant or anything. But it just doesn't look like a very good spot to be involved. So I think when I'm looking at this, what I'm anticipating is that we could have another difficult trading session in the treasuries where we might get a move and, you might miss that move and then you jump on that move and then it doesn't go anywhere. I mean, that's kind of been the pattern this week. But then like later it moves. I think that there's still going to be relatively wide ranges for the treasuries until the Jackson Hole thing. Is just that during the most active time when we're trading, it might be a little choppy. Well, a little thick, let's say. The liquidity is still looking pretty, so it does look like it can be slippery when they need it to be. So that is also, I don't like it being slippery, do I? Right? But I'm going to really need a strong impetus to get me into a trade based on all of that. There's this Quant Mines that has a conference and I kind of want to go, but it's across seas and I don't want to spend that much money at the moment. Okay, Nick Timoros, the inventory of new homes for sale rose to its highest level since 2008 last month. At July's sales pace, there was 10.9 months of supply, up from 5.7 months in January. Since 1963, this figure has been higher only a few times. In August of 08, September 81, and April of 80. Wow. Months it would take to sell the inventory of homes built or under construction at the current rate of sales. That is curious, and never have we seen a shift that's that quick. Okay. So somebody had a question in Discord. Let's see, what was it? When demand for bonds declines, the issuers of new bonds are forced to offer higher yields to attract buyers. So that means if buying a 5-year bond now after the rate hikes, it would have a better yield than the bonds issued some time ago when the rates were lower. Okay. Did they push a little bit lower there as I was typing that? Yeah. Quite easily and slippery though. What do you think? Make some dollars today, Zico says. I'm really at the moment, to be honest with you guys. At the moment, I really do not feel any significant desire to put any risk on. We are moving down. It seems like I should be taking along here in the yields, but I don't have anything direct to move off of, and we've seen some big moves going both ways. So I'm really weary about trying to take a position on this and hold it. I mean, I know that at the moment it looks like a pretty strong downtrend, and I do suspect that if I had to take a trade, I think that I would rather be long rates, because I suspect that you're gonna have like the hedging going into Jackson Hole and people upset about the whole college debt thing, and I think that rates are going to rise. But you just got to remember, with the way that things have been going, you could see another really strong drive up to the highs just as easily. I don't think that the information that I have is strong enough to guarantee a trend down today. And to be honest with you, the flows that I'm seeing right now are not really in line with that either. I know that we're moving lower, but it's not really actually on that much volume. And the order flow itself is not that autocorrelated. So I'm kind of meh. In fact, the thing I think I might be looking for here is, well, okay, might be there at 15, some significant absorption. Because if I'm somebody taking a bet on rates decreasing because of economic weakness, and I'm taking kind of a speculative trade, I'm a hedge fund speculating. I want to move like the one that we just had there would be the perfect opportunity to smash it back the other way, you know? Let's see when the market opens. Yeah. I know, this looks like it's going to go a little bit further. It's not letting up. It seems to me that we've got some selling into a very illiquid market. Well, that was, I mean, look, that was decent at 15 and now a decent amount at 14. We are below previous day's lows now. So I think that that's significant. We still got like 117.13 is kind of like a longer term level. So breach of that might cause a little bit of I don't know what to call it. Might upset some traders. But that might be a place to see it start rotating around. Let's see. That one, so if I just come back on the daily chart, I mean, I did have it drawn on there. Listen, I don't trade the technicals, but if I put the line on there, it's probably a pretty significant changing point, and you can see it has done it there a couple of times. So even though I don't think that predicts that we're going to reverse here, or that we're going to, you know, this could be like a breakout or a reversal. But I do think that it is significant enough of a line that we're probably going to see some dancing around that level. Especially since we really did have quite a strong push from 16 there, right? What broker are you using? I'm using EdgeClear right now. Was on NinjaTrader. I've been to AMP, I've done NinjaTrader, and now I'm on EdgeClear. And I like the EdgeClears, guys. If I'm honest with you, I kind of been sitting here being like, what can I do to help the EdgeClear guys? But then in the end, it's kind of like there's not really a whole lot I can do. So, but I use EdgeClear. Not a whole lot I can do. I definitely, I have to admit, there are people in the industry that are really affable and know how to work with other people, and then there are people that are just total shitheads. Why did you leave AMP? Well, so the primary reason that I left AMP was because I wanted to use my full NinjaTrader license, and I wanted to do some automated trading. But what ended up happening was I really didn't like running my robots on the live. Like every time that I thought I was close to getting those things going, they weren't consistent enough for me. You know? I think that I'm for robotic trading, you know, I'm very limited to mostly the market data. And I don't think that really gives you consistent enough results. I think that for what I'm doing, I really need to go for faster trades is kind of what I'm thinking. And I think that in order to be competitive in that arena, I need to incorporate machine learning. So I have been working on incorporating machine learning, and you know, I don't actually think that I'm really going to find some master robot thing and get that going, but I do think that it could be useful to us. And at the very least, I'm going to learn a lot about that pipeline and stuff. I think that that's going to be useful to me. So, but yeah, the other thing was that I just didn't think that the support at AMP was quite up to my expectations. I mean, sometimes it was okay and sometimes it was not, and I just ended up having problems, and they weren't problems of any of their fault necessarily, but I just ended up having problems enough that it kind of became an issue for me. But then, like, when I went over to NinjaTrader, it was worse, frankly. Like, there was some situations with NinjaTrader where I really thought that, like, this is dumb and this should be fixed. I think the one that bothered me the most with NinjaTrader brokerage was that they wouldn't let me trade the micro treasuries. I'm like, if NinjaTrader can't trade them, who do you expect is going to trade them? This instrument was like literally created for your audience, and you think it's too risky to trade. Okay, whatever. I was like, clearly the people that are doing this aren't traders. So I still think they have the best charting software, bar none, the best charting software. They really do. Every time that I go over to other trading software, I'm basically like, well, this should be changed to be like NinjaTrader. The margins are too high. Listen, you guys worry about the margins too much. Seriously. Like, still waiting for the threading to be fixed on NinjaTrader? Where is that becoming an issue for you? That's curious. I have run into the threading, but that was more like, okay, I have to be really careful about the way that I write some of my indicators. I've never had that. Just sim that gets stuck orders. That's weird, actually. I'm not familiar with. I've never had that issue. No, I mean, like on a micro, you're talking about like a few cents more difference in margins. It's not a significant thing. like the issue I have with the focus on the margins is that, like, okay, like let's just say that it's really bad. You're trading the 10-year treasury and you're paying like an extra $1 per trade, right? Okay. That's still like 15 trades for that to matter even a tick, right? So the margins aren't your problem, right? And it's worth paying a little bit extra on the margins if it means that you avoid a large loss, right? Or that you're okay when your time comes and you really want to YOLO in and you're able to. Although, you know, edge clear isn't the best for the YOLO in sort of a thing. You got to, they force you to be smart. They do. That's part of what I like about them. But I don't know. Listen, if I was to come in here and I was like, my primary goal was just to make the most amount of money that I could, whichever way I found was the most effective way for me to make money, it wouldn't be being a broker. Don't envy their position at all. It's tough to be competitive. I feel like that people are acting like that the brokers are just robbing you dry, and you know, that's just really not the case. Being a broker is incredibly difficult. The margins are really thin. It's not an easy game, and they're not rolling in it, you know. So I really don't think it's only when you get into like you want to use Thinkorswim or interactive brokers where I think that the margins become an issue. But any of the futures specific brokers, I think you're fine. Obviously, yes, AMP has the lowest commission though. AMP has the lowest commission. You might pay for it in other ways. Okay, because if you come in and you take $100 or $1,000 loss, okay, that's going to be worth thousands of, you know, the margin on thousands of trades is equal to that, right? So it kind of evens out in the end. But I don't know. It's not really that interesting of a subject. I know for some reason people like to talk about it, but brokers are not actually that interesting of a subject. That's why my recommendation is find a broker that you like. Like because they all have salespeople, right? Almost all of them have salespeople. Or like you sign up for a demo and they start emailing you and stuff. Talk to them, form a relationship, pick the broker that you like. Or maybe you have specialized needs, then you find the one that is able to accommodate those specialized needs. You signed with a broker and their margins are not what they advertise on their website? Oh, really? Well, probably what happened there, C-Cow, is that the margins are always changing. Like, this is the other problem, is that we're really looking. So I went and I made a spreadsheet that was like, okay, what's the difference between all of these brokers and like what's the change? So could I do a video that is like the ultimate futures broker comparison video? And what I realized was that the numbers changed so often that a video like that was useless. I never worry about fees. It's just part of the trading plan. Yeah. Here's the other thing, is that the CME data fees are bigger than the margins right now. Man, the data fees are hurt. For a small account, the data fees hurt. Like I really want retail day traders to be able to come in and trade micro treasury yield futures for minimal risk. so that they can come in and they can say, I want this to be my hobby. I'm going to put, $1,500 into it, let's say. Okay. And you should be able to, if you are smart with your risk, you should be able to trade that for a really, really long time. And hopefully you're able to trade that long enough that you are able to find your edge. You're able to understand the fundamentals of the market enough to be able to make good day trades on the news and that sort of a thing. It takes a while to figure it out, to see, understand the market and have enough experience to have that knowledge, right? That's what I think is so hard about trading. That's what I think really makes it hard, is that there's just a lot to know about markets. And so, because if it's technical if all you focus on is technical analysis, I could teach you that in a week. Everything there is to know. In 1 week, I could probably teach you more about technical analysis than anything you will find online. So there's all these great indicators that are really much more advanced than what most people teach you, and they will reduce lag or aliasing error and are more responsive and faster because of that. And so there's a lot of interesting things you can learn about those, but in the end it's still technical analysis and it doesn't help you that much, and it's just like a day thing, and then you got it. And that's a week. Whereas if you want to understand the fundamentals of the market, you want to understand how does the fixed income markets work, and how do you study that for a lifetime. You can study that for a lifetime, and it takes a long time to learn all of that stuff to get to the point where when an event happens, you can interpret it quickly and actually make money off of it. So that's what I think makes trading so hard. I want people to have that opportunity to be able to trade long enough to have a chance at figuring that out, right? And the biggest roadblock to a new person doing that right now, in my opinion, is the data fee. That in the end, you end up paying about $50 worth of fees to trade futures, if not $100 based on which platform you're using, right? And that hurts. So, well, AMP sucks. I'm just saying. I don't think I should rephrase that, Siku, because I don't want you guys to think that Seth said AMP sucks. And if everybody goes and starts saying Seth thinks that AMP sucks, AMP might come back and get mad at me. Okay, and say that I'm saying something that's inaccurate. Okay, I have found that the support experience with AMP and NinjaTrader specifically has been inconsistent. And as somebody that is really in the position of an influencer, I wanted to go and try other people and see what was the experience different with different brokers. And what I'm telling you is that generally speaking, the experience is not, here's the things that will change between brokers. The ways that you can fund your account, what the report that they send you every day looks like, right? The commissions, and how good your support is when something goes wrong, right? So how much does that last one, how good is the support when something goes wrong, right? Something goes wrong, you're not able to take a trade that day, you miss a really strong trade. Okay, that could have been $100, $200 for me on micro treasuries. I've missed trades $50 to $100 because of support problems, right? Is that worth some extra commissions? Well, if you're talking about $1 difference per trade in commissions, that's like 100 trades worth. So you do the math, right? But yeah, any technical difficulties. I mean, the funny thing is that the technical difficulties that you're going to have are really not quite because of your broker, right? Like, they're always going to be working within Rhythmic or CQG, right? But they're the one that fixes them. So you want to make sure that the person that picks up your support ticket is somebody that understands what's going. For me, it was doubly that. Like, the thing that I hated was that I'd come in and talking about an issue, like I want to trade the micro treasury yield futures, and none of the guys on support even knew that that was a thing yet, right? They're not paying attention. They're not looking at, oh, what are the new products? I need to be completely up on this product, and I need to have everything ready because my traders are going to want to trade that product on that date. That wasn't them, you know? That's what I didn't like about it. It's not that they suck. It's just that I wanted to see if other brokers could do better. And I think that they can. And it's kind of up to you to decide where the value is, right? So AMP doesn't suck. It's just that the advantage of AMP is the lower commissions. I discovered that the lower commissions was not that valuable to me. I'm not sure what's the big deal about intraday margins. If you do not have enough capital for maintenance margin for each contract, you can't afford it. I use the maintenance margin for each contract for my rule of thumb. I agree with you, Jacob. But you know what? It's a lot of people aren't using that. I was talking to the Edge Clear guy, my Edge Clear guy rather, on the phone the other day, because this is looking through their platform and stuff. They were supposed to be coming out with something that hadn't happened yet. I wonder what that was about. I wonder if it's, I don't know. Listen, things happen in the fall, and there's a couple of interesting things coming in our space. Okay. And I don't completely even necessarily know what they all are. I know of a few things, but I know that there's other stuff that's beyond what I know that is supposedly really, really exciting. But anyways, I was like asking him, well, what kind of issues do you deal with? And, you know, he was talking about that like, you know, when he has an issue, it's somebody that's really leveraging themselves up as high as they can go. So even though I think that that's probably the smart way of doing it, that's not the way that everybody trades, unfortunately. There are people out there that are trading, you know, micro ES with $500 account. Okay, so for EdgeClear, do you need a grandfathered in version of NinjaTrader? Okay, so what I'm doing, Captain Price, is kind of a hack. So I'm using a demo version of NinjaTrader, and the demo trader of NinjaTrader still allows you to connect to Rhythmic. And since I'm not using NinjaTrader for my execution, I can get away with that, right? So, but if you wanted to execute in NinjaTrader and you wanted to use your full license, I have a full license from being part of the NinjaTrader ecosystem that I can't use unless basically my broker is NinjaTrader, right? Yeah, that's another thing that I don't like, is that brokers are moving more and more to proprietary platforms, you know. And sometimes when you get locked, like the issue is if you're gonna lock me into an ecosystem, you better really be bringing the value out. So for instance, Iron Beam, I mean, remember I did that video. Well, that video was a beginner video, but I talked about the Iron Beam app because they sponsored the video, and I really liked the Iron Beam app, I have to say. I think that it's not for everybody. Okay, it kind of depends on the kind of trading that you're doing, and you know, like I don't think they would be appropriate if you want to do HFT, right? But the system that they had, where, you know, it was the same app on your phone or on the desktop, and that app was quite smooth, at least when you're looking at one DOM, I didn't really like seriously load test it, but it works. And they do that by having like their own everything. Like they have their own data and the whole shebang. So if you lock yourself into their ecosystem, you are getting a benefit from it, right? But what I'm seeing a lot of people do is, oh yeah, you can do everything that you could do before, is just that now you can only use us. I didn't like that. And that's kind of the way the NinjaTrader went. My understanding is that that's that Sierra Charts is starting to drift that direction. Yeah, that's not my favorite thing. But it seems to me that if you really want to offer a cheap product, that you kind of have to do that. You know, like that's how NinjaTrader is able to offer a product where you just pay for it all up front, and right, they have the broker business and they support each other. Like ATT phones did that trick initially with the iPhone 3G. You know, there's been many instances in corporate America where people warn that corporations will do X thing, and I'm kind of like, well, I don't think that would really make sense. I don't think that it would really benefit them to do that. But what I have discovered is that when it comes to money, people are quite cynical. Like they'll often be wrong, but the markets tend to take the cynical look on things initially off of initial news, right? It's like, oh, the economy looks bad. That means that the Federal Reserve is going to print money. We should buy stocks. Like, that's really cynical. Look on things that we're going to be stuck in this perpetual. I mean, maybe that's what happens, but we don't really know. We don't really have anything to compare to. But there's a large group of people out there. Like when you look at the public and what people want to talk about with the economy, they're always talking about these worst case scenarios that are, in my opinion, unlikely to happen. But at the same time, I understand why people would be like that, because even though those things are unlikely to happen, there's enough of those things where there's the potential, right, that you're going to see them happen regularly. All right. Like there could be 1,000 different things that could go wrong. And if they go wrong, they're really bad, but they never happen. But then if just 2 or 3 of them happen, right, you're always seeing that one problem. I think this is one reason why a lot of analysts get smacked is like, so like I was reading about Larry Summers, right? Because Larry Summers has been predicting, has been arguing vehemently against student loan debt relief. And he's been warning the administration that that's going to result in inflation. I think that at least on the pandemic that he was spot on the nose, that the policies that they implemented to try and get us out of things were unnecessary and ineffective, and did increase inflation to some extent. I think that a quarter to half of it was probably the excessive stimulus. And anyways, he was right. But the thing is that the left hates this guy. The left always actually hated Mr. Summers, because he's always kind of been like the establishment economist. Like, he's been around for a long time. He was around during the Bill Clinton years, and he was around during the Obama years. So So they don't like him because he's always been like the establishment economist. And so they'll go back through his history and they'll say, well, here was all of his policy prescriptions that were like failures. And so they're like, well, everything that he did was a failure. Now, well, the reality is that for everything that you see that gets mentioned there was probably 100 other things that he also did that he was right on, right? It's just, it's only the failures that end up being visible that we can see, right? So there's a big bias in our attention, right? There's a big bias in our attention. And what the end result of that is that the average investor ends up being very cynical. But sometimes you can take advantage of that, right? I don't know what you do today, but I tell you what, I did pretty okay going against all of these people that were bearish on the economy the whole post 2008 period. So I looked at it and I just tried to implement what I knew, and I didn't have a ton of capital to risk, and so I kind of risked it more with my career and the moves that I made and what I did with my house and everything. And you know what? I'm not gonna say that I'm a millionaire, no, but I did pretty damn good compared to most of my millennial peers, right? I have a pretty nice house. I have really decent amount of equity built into it now, and most people my age are like, I'm never going to be able to afford a house, right? And I was able to do that because I said, rates are going to stay low for a long time. We're in a Goldilocks period, and I should be trying to throw as much in here as I can and take the risk while I'm young. I wish I could have taken more risk. Kind of wish that, well, not wish, but because I like being married and that was a necessary step. But I was pulling in a lot of money, and I wish that I could have been in that state for longer. But that brings us to the subject of today, which is student debt relief. Because I think this is going to be a big problem. What do you guys think about that? So you're talking about moral values, ethics. So I was seeing some people on TikTok and they're saying, well, there's like costs. So, you know, it's like there's a certain amount of stimulative effect that this is supposed to have, that this should help the economy. But then there's also like there's a certain amount of inflation that it could cause, and that there's a certain cost to the taxpayer. And people are doing all of this analysis like, okay, you're going to spend $300 billion, but it's maybe like 0.5% GDP boost or something like that. Not really worth it to the taxpayer compared to other things that their money could be spent into. True. But here's the problem. The moral costs are so much higher. The moral costs are so much higher, man. Give free education in colleges without increasing state college fees too much. Also for elite schools wouldn't need loan. What I mean, I don't understand how you can expect people to make responsible decisions when you know, anytime that there's a negative consequence to something, you remove it. Like something that I keep seeing people say is like, well, we were young kids and we didn't know what we were doing when we were taking these loans out. Bullshit. You have to sign documents. You know what you're doing. You know what you're doing. And part of the lesson there for you, if that's what you did, was that you should be doing the math. You're going to be taking out a loan. Like, how can I afford this and so forth? And is the job that I'm going to get from this actually going to be able to pay for it? It's crazy. And if you remove the incentive from that, what are you actually doing? You're enabling people to be stupid. You're telling people, no, you don't have to read the fine print. You don't have to worry about how much debt you take on. You don't have to worry about whether the thing that you're learning is actually going to make money. Huh? Just do whatever you feel like. The moral cost is higher. The moral cost is higher. what would you do when the next time the Fed lowers interest rates, but stocks go nowhere for a long time or even lower? Well, if the Federal Reserve is lowering interest rates, I can expect that within the next 2 years that stocks are probably going to go higher. That's just the way that the cycle works. But people need to learn in many ways, and some need money lessons. Yeah, it seems to me that a lot of young people needed that lesson. I don't know. It's also a very regressive policy, I have to say. So when I go on Reddit, like one of the discussions that I saw about this on Reddit was, well, the Republicans are going to sue somehow, right? Which is probably correct. I don't know who ends up having the standing and how that legal case like proceeds, but it seems to me that the president does not have the power to just forgive loans. That what he's doing is not legal. Let's see here. It's too expensive across the board. Well, yeah, but that's okay. We could get to that one in a second. Anyways, I don't know how that all plays out with the legal consequences, but the Democrats were all saying, well, if the Republicans want to fight against forgiving student loans, then let them, because that'll be a loser for them. Oh man, I really think that Democrats are way overestimating how big of a winner that is for them. Like, yeah, it's probably great for your small young base, okay, that are in school, people that don't really vote anyways. But what you're doing is you're breaking the social contract. Look at these treasuries, just very, very pressured. Very pressured. You're breaking the social contract, man. There's very severe consequences from doing that, right? And people are not going to be happy about the social contract being broken. I think that this issue could come back to bite them hard, because working class Americans do not like having to foot the bill for doctors and lawyers, right? People that are still in school. It's just, it's a very bad policy. And those are like the swing voters, right? They're making their coalition smaller from doing this. Okay, so to Steven's point, college is too expensive. Yeah, it is. You know why it's too expensive? Because the government got involved and said everybody should be able to go to college, and so we're going to make it so that anybody that wants to be able to take on debt to go to college can. That's what happened. And then because the money was available, the colleges started taking more, and then the government just keeps pushing and pushing and pushing, right? You can't... They're coming in and making the government the supply basically means that you get infinite supply, right? So you can have infinite demand. No wonder the prices went up. And yeah, the colleges take too much. Like the amount of money that the administrators and stuff are making over there, it's ridiculous. It's totally ridiculous. I think the funny thing is that everybody's like, well, what we need to do is we need to make the colleges pay for it, and there needs to be limitations on them and things like that. Yeah, you could do that. You could put a band-aid on a problem that you already created, or you could just not do the things that create the problem in the first place and allow that to function in a market economy like everything else. What if I had taken it at like 16? Would that have been 20? I think. That was, by the way, a second wave at around the time that you would expect. And the order flow when we had that first wave down was pretty much a decent amount. It went from 80 to 9, so it was about, somebody dumped about 15,000 contracts on the market. This particular move, I'm not so sure that it's another meta order. That one could have been just the traders expecting it to happen. Government wanted a piece. Well, I think it's a really big problem that human, I'm not going to say that it's human nature, but that on balance we tend to want to take more power, right? Because the thing that I continually learn from interacting with markets is that you need a decentralized system to be able to deal with these kind of complex issues. There's just, you can't have one person or one government agency that knows enough about it to always make the right decisions. It's just, it will never work out that way. And even the market will make mistakes, and you need a system that's going to be resilient to those mistakes. So the desire to centralize everything, it's a really bad one, right? I do think I could take a trade. I'm not so sure. I still want to wait. I might wait until after the S&P 500 gets going, right? People probably don't want to hear about the politics, but listen, guys. The thing that's going on right now is going to have a direct impact on what we do in the treasuries, right? I can still see the day coming. I mean, was it kind of like that earlier in the year when it was the bond vigilantes day? I don't think it ever really quite got to that moment. What do you think is going to happen, guys, when all of these Wall Street bet guys realize that they can just put $500 into a futures broker account and start trading interest rates, right? And they decide to do the sort of thing that's been going on with Bed Bath & Beyond and GameStop and everything, and they decide to do that in the treasury market, right? Because the government's taking on too much debt or is being fiscally irresponsible. I'm telling you, I think in our lifetimes it's going to happen. And what they're doing with forgiving student debt makes it more likely to happen. Brings it forward. I don't think that this is, I feel like that Biden is making this decision thinking, well, I need to do something to save us in the midterms, and so that's why we need to forgive student debt, because that's what's going to cause people to vote for us. I really don't think this is going to be the winner for them that they think it is. And especially because what happens if interest rates have to rise to 4%? Which is a very real possibility. Some Fed members are saying that they think it's going to go to 4%, right? Already they're saying that. And then, you get this stimulus that comes through and stuff. Yeah. Then interest rates rise to 4%. That's not going to be very good for Biden's, right? Because all people are going to see is, oh, look, you did another thing and it turned out bad as well. That's what they're going to see. It's not going to be a winner for you. The risk reward on this policy, I don't think is worth it. And the larger point here was that I don't think that it actually pays to be cynical in the long run. That was a big order there at 12.5. So why do you need the big order there? Big order there, only for a moment. That order was really suspicious. Big order is there, about 900 lots, only for a moment. People sell at 11. There's an iceberg there. Order disappears. That's classic spoofing. No, it's not the Fed's fault. Yeah, no, you're right. It's the politicians' fault, right? The Federal Reserve can only play the hand that they're dealt, and then everybody blames the Federal Reserve. It's a freaking joke. That is probably drives me crazy more than anything else in politics right now, is that everybody blames the central banks for all of the problems in the economy, when most of these problems were created by politicians, and the politicians don't take any blame. Politicians turn around and get to play this game of, well, I'm the one that's actually trying to help you. Bullcrap. You're doing cynical things that you think are going to bring you votes. You're not trying to enact sound economic policy. You're not. Oil pressured a little bit here this morning. It does seem though that the we're once again to where the interest rate markets seem like that they're more active than everything else. Yeah, politicians are voted on by people, but so like there's this whole thing like, okay, when people realize that they can vote themselves money, you have a really big problem. I think that more people realize that than you think. I think that you get away with that kind of strategy on kind of tepid things, but when it starts to become obvious that that's what you're doing, I think that people start to push back on it, and I think that that's the point that we're getting to with student forgiveness. Yeah, they're only canceling up to 10K. It's about $300 billion. So if they canceled all of it, I think they would be $1.5 trillion, was what I think the Goldman Sachs economists were saying. There was another move lower there. There is some serious iceberging against this move though. Like yesterday, we saw a lot of icebergs. It eventually flipped around really hard. Now, the icebergs that we saw yesterday were much stronger. The icebergs that we saw yesterday were much. Yeah, no problem. I thought it was. I think it's really easy to get confused on those things, right? That's why, like, you just have to be really careful with the language, right? I think if you build AIG, you should, well, but maybe you shouldn't have built out a. Okay, so I think that there's a couple of problems here and reasons why it's different. Okay, number one, the reason you bail out AIG is not because you have sympathy for AIG and we need to be nice to everybody, etc., etc. The reason we bail out AIG is because we basically have no choice if we want the economy to continue. Okay, so it's not the case with student loans, right? But two, we probably shouldn't have bailed out AIG in the way that we did. Okay, if a couple of private corporations want to get together and bail out AIG, and they can do that. And you know what? There was a bill that was floated at the time that would do that was being put out by the Republicans, but the Democrats didn't want to have anything to do with that, and everybody was trying to shove it through so quickly that it just got ignored. And they did the original stimulus bill because like time was of the essence. Okay, but it can be done. Like the government can organize it, but it's done with private funds. That can be done. Okay, now do you think that the private funds are going to come in and bail out students? Because I don't think that they will. Like, that's the whole problem here, is that the loans don't make sense in a market economy. So you shouldn't be surprised that by the government being involved in that is going to create all sorts of market distortions, right? This bailout will cause even more inflation for sure. I think it will probably cause inflation. Yeah. I'm not going to say like even more inflation or whatever. I mean, like the problem is that the economic conditions are different, right? Like right now, we have some larger factors that are kind of putting us into an inflationary regime, right? We have a war going on in Ukraine. We have drought across the world. There's still a lot of supply disruptions and problems for the pandemic. And so it's likely, in my opinion, that the market, unless we go into a recession, like a deep recession, that the market will be somewhat inflationary going forward, and that the Federal Reserve will not be able to just like bring interest rates back to zero and things like that. So when you're already in a market like that, and then you come in and you do something inflationary, it's a much bigger problem, right? Okay, if the client buys a bond with a 10% yield, when it reaches the maturity date, the buyer would get the original premium, and that fixed at 10% as well, regardless of the bond market condition at the maturity date, right? Okay, so it depends on which bond you're getting, but if we're saying that it's like a 5 or a 10-year note, okay, then yes, what's going to happen is the bond buyer will get the coupon payment every 6 months. It's twice a year. Okay, so let's say 10% is a bad number. Let's say that you bought a 10-year note when it was issued at auction for 2% coupon, right? Then that means that every 6 months you get $1,000, and then at the end of it you get your original premium. Yes, if you hold it all the way through. Okay. Now, if interest rates go up to 4%, right, then your the coupon doesn't change, right? So you're still going to get paid $1,000 every month. But somebody that's paying, or sorry, somebody that buys it today. Should I back up? I had an ADHD moment there. Okay. So if you buy the for 2%, okay, you're still going to get $1,000 every 6 months. But somebody that's buying the newer ones that has a 4% coupon per year, then they're going to be getting $2,000 a month. So that means that the value of the bond overall is going to, like, the price that you pay to have the bond is going to have to go down by that $2,000 a year to compensate, right? The bond becomes cheaper and less attractive. Yep. So typically, my understanding is that prices will, like, the price on a bond will decline over time, and then there's a period where it will kind of come back up to the par value for the maturity. I think I have a hint of maybe why you might be asking that and what you're trying to do. And the thing that I would say is just that if you're going to hold the bonds to maturity, there are still some issues that you can have with that, right? So the first one is, and the issue that you're going to be dealing with right now is that, yeah, if you hold the bond to maturity, you're going to get your money back, but it won't necessarily have made up for what you lost in inflation, right? So that's the inflation. That's why inflation is such a big risk to a bondholder, right? So you can hold, because in order to avoid the volatility of the interest rate change, right, you got to hold it to maturity. And when you hold it to maturity, then the inflation that you experience ends up being a significant factor. So if you had owned 5-year bonds through this whole COVID thing, you're probably not too happy, right? Because you didn't get a good yield on it to begin with. The bond lost value, and you hold it all the way through to maturity, and you got 10% inflation. So either way that you look at it, you've lost 5 to 10%, right? Yeah. So this is where, like, when we were talking about with Akshay the other day, I think it's a very good idea, but you know, there was this fund that did something where there are certain bonds, QSIPs, that like are no longer being tracked by the index. And so when that happens, the prices on those decline artificially as everybody sells them. And so they were coming in and taking advantage of that price aberration, selling it before they came out of the index and then buying them back up after they got out of the index. And they didn't account for those kinds of problems. And then on top of that, they didn't account for their own market impact as well. So when that strategy didn't work, you know, the one time that it didn't work, like the whole fund blew up, right? I think that you could do it smart, right? But you have to realize that there are some significant risks to it, right? Like, I think that the big mistake that they made is that they leveraged up, right? So I think that, like, it's generally speaking, it's a good strategy, but yeah, there is going to be like there's going to be a period where it doesn't perform very well. Just don't let that bad performing period like blow up your fund. Oh man, they're aggressive. The way that this has been trading so far is kind of like saying, we're just gonna trend all day and you might as well just jump on it now, Seth. But I really don't like this. It kind of slips lower and there is aggressive iceberging against it the whole way. We have seen on this move down, we have seen the liquidity increase. And it wasn't like that yesterday. It was like that on Monday, but it wasn't like that yesterday. Oh man, that initial move, just the first 5 minutes on the S&P 500 is a pretty negative delta candle. So that's another thing that we might need to look out for, is if the S&P 500 starts to sell hard, that could create some flight to safety flows. Although right now, I think that the currency flows are probably more significant. I'm seeing corn take a little jump right now, by the way. Well, see, I'm kind of watching that offer to see if like a level break trade materializes. There was 2,000 there was 900 there. It kind of looks to me like they might do it. I could probably try a stop limit here, where, you know, if it goes through, maybe I take 2 ticks, but okay, what trading software do you use? So I'm executing on the Jigsaw Day Trader DOM. I am a Jigsaw affiliate, so if you go into the video description, there's a coupon for $100 off of purchase of Jigsaw. And then for charts, I use NinjaTrader 8. I'm actually, I have a full license, but I'm actually using the demo version right now. If you're not going to execute in NinjaTrader, you can get away with using the free version of NinjaTrader. So that's what I'm using. I have a bunch. If you're new here, I have a bunch of links in the video description that are valuable, I think. $100 off of Jigsaw. Have my indicator package that gives you like synthetic dollar index and spread charts for NinjaTrader that I think are important to have. There's a affiliate link for a news squawk that I think is important to have a news squawk. Yeah, Sierra Charts is a popular choice. I don't think that Sierra Charts is as good as NinjaTrader, or sorry, Jigsaw. I mean, really, I compare Sierra Charts to Jigsaw because Sierra Charts has a DOM in it that has many similar features that they stole from Jigsaw. It's not as good as Jigsaw's, but generally speaking, I'd say it gets the job done. And so if you want to go with Sierra Charts, I think that is a reasonable choice. Yeah. It's kind of the I would think of it as like the economy choice, which, for most, well, not most, but a lot of retail traders, that does make sense, right? So with Jigsaw, there's like a $50 a month if you want to actually execute on the DOM, which I think is an important part of it. $50 a month. Whereas Sierra Charts, you don't pay an upfront fee at all, I think, and it's like $30 a month, right? If you're a geek, it's okay, but if you're a noob, I would start with something similar. Yeah, I don't know. If you're brand new to trading futures and trading in general, I really think the setup that they have at Iron Beam is compelling. It's a web application. You can run it on your phone. It's simple. It works. All that pullback there was awfully quick, wasn't it? They didn't get through that big order. I'll just cancel that. Oh, so I might have been missing some stuff here on the tweeters. Robert P. Ballin thinks that there might be a cap on how far the yields can go. I don't know what he's thinking or what he's saying, but how far up did it come? 12? Like what I saw there was a very aggressive pullback in an area that may potentially create a liquidity hole. I think that you got to be careful about trades here still. It's very, very difficult, I think, to position yourself in a trade that's not going to get adverse excursion here if you're trying to go short. If you're trying to go long, the problem is that trade might be a bad trade, but if it is a good trade, you might get a chance where it just reverses hard, right? Expecting prices will not develop. Well, the delta on the open in the ES was very much a sell, but they recovered. They recovered from that, so. Maybe watch RTY. Well, what I'm seeing right here today is that the commodities are leading the way with corn up 1%. And then of the indexes, RTY doing the best. But on the other end of the spectrum, things that are doing the worst, copper and silver. So I don't like seeing copper at the bottom there, right? I am getting to the point in the treasuries where like sitting through this and not participating in this trend is kind of getting to me. But like I look at that tape and I'm like, there's no way I don't think that I should take a trade there. I mean, I could try shorting the yields here, but so the issue I have, if I come over here to the chart, they've pushed down quite a bit, but look at the volume. Is it that much? No. This looks like a good place to go long. The order flow isn't auto-correlated enough for me to be like going for a trend day down, right? I think that when it's moving down, people are acting like it's going to be a trend day down. I don't know if that's actually likely. So that's where I think I could just maybe justify the reversal, except for that I don't really have an impetus. That's kind of a little bit too much of a technical trade. So that's why I feel like it's probably not worth me trying to take it. Let's just say for the sake of argument 095, 3.095. Oh boy. So I'm seeing headlines that Tether is resisting the Treasury Department's sanctioning of Tornado Cash. That could be a problem for the broader cryptocurrency industry. NASDAQ killer. I wish I was a bird. I think I'm. Wait, what? Well, now is the time to go. Listen, NASDAQ killer. Even the central bankers are going on vacation this week, right? Like, I know Jackson Hole Symposium is like a big deal and a big, but there's a reason they do it in Jackson Hole, okay? Could get volatile. I don't know, man. Like, look at the ES though. It's not really moving. I mean, it was down 5,000 contracts. Looks like it's recovered that amount of selling. 10-point range. That does not look like fertile ground for a trend to emerge in the ES. Maybe you could try taking some out of the middle, but that one's I don't like that trade. I have problems with that trade. Never works out for me. I'm kind of thinking about our earlier discussion, and I think, some people maybe don't like when I'm kind of analyzing the political situation. I'm kind of like, well, this kind of doesn't like the way that I'm talking right now. I think that people want me to get on the soapbox, right? Want me to come in and say, look, you come in and you forgive student loans. This is a terrible idea. People are going to get pissed. There's going to be social unrest. You're breaking the social contract. You're forcing the taxpayers to pay for it. And you don't have the legal authority to do it. This is a terrible decision by the Biden administration. That's what people probably want, right? And there's probably a lot of people watching conservative commentators saying things like that and are like all totally into it, right? I'm more of, this is something that could affect markets, right? I'm more interested in that. I don't know if everybody's as interested in that. I still want to talk about canceling student debt because, to be honest with you, it kind of pisses me off. There's so many people out there that didn't go to college. And now they're saying, oh, what? I could have done it for free? You really think that everybody's going to be happy about that? Come on. It's going to cause very deep social problems. Yeah, they didn't want to take the risk. So what you're saying is being financially responsible. You're being punished for being financially responsible, right? You don't get any of the rewards of going to school or the debt, and you end up paying higher taxes. Markets reward risk takers. Only up to a point. I don't think that we should be encouraging people to be completely irresponsible, right? So that's a lot of what happened in 2008 was that it wasn't that people were taking on risk, it's that they were being completely irresponsible with risk. You call not being educated financially responsible? Well, you gotta think about the situations where college is a reasonable or not a reasonable expectation for some people, right? So these aren't people that had a chance to go to an Ivy League school and didn't choose to do it or something like that, right? Although I'm sure that there are kids that they could have gone to an Ivy League school and they chose to go to the state school. They could have gone, I could have gone to the University of Chicago and I chose to go to the University of Utah because the tuition was cheaper, right? And if I knew that I could get all of my debt taken off because I didn't take on debts, I could have gone to the bigger school. I never even applied to schools like that because I knew it was too expensive. What pisses me off is ever since I started trading futures not too long ago, the opening and price action has been like watching paint dry. Well, it's the summer, Siku. It's the summer. Don't worry. The markets will be plenty. There will be plenty of volatility here in the next 3 months. Okay. So you get September and October, which are historically negative months. So if stuff hits the fan, it's probably going to happen there. In fact, I bet you that we will see economic weakness in September and October. It might not follow through to like a big problem and everything, but bears will make their moves in those months. Pretty good chance of that. And then you got the election. But when the summer ends, so you got Jackson Hole, things kind of changed a little bit after Jackson Hole, but then after that first September non-farms, you're going to see a very different stock market. Yes, you will. So hang in there, buddy. It gets better. It is a thick book, isn't it? I said, was it earlier 3.095 earlier that I said for the sake of argument? I'm seriously considering going short at 3.1. I really don't like taking such a counter trend trade, but it does look to me like that they don't actually have the volume to be pushing down as aggressively as they have been, and that there's a higher possibility of it flipping on us. If I'm wrong, then it's just gonna like trend down and it's gonna be super ugly, but I think that there's a good chance of it flipping around here. We do have some news at the top of the hour, though, don't we? Yeah, pending home sales. It depends on which instrument you're looking at, but I was thinking short 3.1. I don't think that I don't think that I could really consider that a trade right now, because I don't really want to be taking a position ahead of pending home sales, right? Although the way that those numbers have been going, there's a good chance that the pending home sales does make the interest rates come back down. So targets in ZF to the down. I don't see it. Just the big order at 05. The book here in the 10-year is thick though, especially on the downside here. We're starting to get more regular looking markets in the treasuries, aren't we? I'd say that it's still very slippery, relatively speaking, but the book is better. The book is better. See, it's already 5 ticks. Like, that would have been a good place to get in. It's too close to the news. There are a lot more tracks in this particular playlist. How many are there actually? 345? What? Okay. Okay. It has been confirmed that the US will respond to last week's Iran requests, and the final EU document today, says the Wall Street Journal. So that oil deal might be coming. That's probably a negative for oil, as that would be supply coming onto the market, right? Zelensky says he is ready to quit if Russia will stop the bloodshed right away. So if the Ukraine war, here's the funny thing, if the Ukraine war were to just like magically end today, that would, I think that you would sell the treasuries, right? Or sorry, interest rates. Buy the treasuries and sell the interest rates. So that's a really inflationary factor right now. That would be like such a big, that's a really interesting move to think about. I don't see it ending yet. We got winter coming. Russia control gas prices. I don't know. Seeing more people responding to this Wall Street Journal story. I'm surprised that oil is not moving more than it is. I am seeing the start of a sell. So let's call it 94.1. See if they move down from here on oil. That's what I would expect to see if an actual deal comes through. Although some of them might be priced in. I mean, some of the downturn that we were seeing earlier in the week was probably due to reports that they were getting close. Breaking: more than $10 billion in student loans for public workers canceled ahead of broader Biden announcement. You know what? Somebody here on Twitter in the Treasuries pointing out something very important that I keep forgetting, is that it is roll week. Like, not only are we getting auctions, but we're getting a roll too. I mean, that might be able to explain some of the icebergs that we've been seeing and the increase in liquidity and stuff. Contract changing. Yeah, this is an important factor. But the problem is that that's a factor that kind of makes things harder to sort out, right? Okay, here comes the news. Okay, so pending home sales change was -1 versus an expected -2.75. And not much of a reaction to that. The Treasury's still looking pressured to the downside, so not getting a whole lot of support for my reversal trade. I could probably pick a few spots here where I might get some pullbacks. I think that might be fun. Okay, so you're seeing a little bit of movement there in the treasuries. I'm just hearing something over the news squawk. BLS announces March 2022 preliminary benchmark revision for national non-farm payroll survey data. Since when has that ever happened? That's a little bizarre. That was a positive revision to March. That would make sense to see treasuries sell a little bit on that. It was very tepid though. And we are seeing a little bit of volume pushback, right? Well, my traders on Twitter are awfully quiet today. So do you see the way that this profile is developing? It's very unusual. It's like 20,000 at each step. And no real... You would think that at this point we would have like a big peak here and a point of control at 10, but no. So we may be to a place where this short trade maybe makes more sense. But I think that at the moment we're likely to continue in this area for a bit. See, I feel like if I was hedge fund, I wanted to hit back, these prices would be a good place to do it. But I'm not seeing it happen. Maybe in ZB, but no. I gotta be really careful about taking a reversal trade, and I'm just not sure that I can justify it at the moment. Maybe I could try going the other way. I think the issue with going the other way is I don't know if the reward will be that great from doing it. Like I could try getting in here, and if I got 3.115 and made 10 bucks off of it, I think I'd consider myself lucky. Well, let's come over to Zero Hedge, see what they've got on their tsunami of shutoffs. 20 million US homes are behind on power bills. What is it normally? Fed balance sheet shrinkage kicks into high gear in September. That could be a factor. What did we start the day at, by the way? We might have been able to make 5 basis points. I wouldn't have been too upset if I had made 50 bucks, huh? They're still holding 90 for now. There's probably a decent amount of iceberging at 09. Sorry, not 90, 09 in the 10-year. Probably going to be a little bit more volume if they break it, but I don't know. Do you think that we'll continue to see the volume push consistently down through here, or do you think that there's going to be a place where we form more of a distribution? Nothing too interesting on Zero Hedge. It is always interesting when you get in pretty strong trend with no real news coming out, but those can often be some of the most consistent drivers, you know. That's an interesting question. Let's say that Powell delivers the most hawkish jacks and whole talk he possibly could, but core PCE and personal spending both come out solidly below expectations. Which matters more? I think that the data matters more, but I'm not sure what trade I would take in that situation. I think that would be a stay out for me. They're still kind of chilling there at 10. This move is just not following anything that I've seen. There might be some flattening coming in here. There's definitely something going on in the 30-year buying here. I don't know. I think what they do with the balance sheet matters the most. I think that what they do with the balance sheet definitely does matter to financial conditions. It's just that I don't typically find that to be super indicative of which way the tape goes on a day-to-day basis. You know what I mean? We have had some auctions that struggled lately, though. I am concerned. Like it could. The issue I'm having right now, like think about yesterday, okay? When those economic numbers came out and the way that the market moved like that, I was like, wow, that's pretty impressive. Maybe we're gonna see 2.75. But earlier than that, I was saying it just looks like the treasuries are headed higher and they need to reprice higher, and that now that we have the 2-year above 3.25, they looks like they're destined to touch 3.5, right? So like, well, every time that I see a new piece of information, I'm seeing like, 25, 50 basis point difference. So it just puts us in an area of very wide uncertainty. They're not dumping. Well, but they're not, remember that none of it is selling. They're just not renewing them. They're not rolling them over. Large meta order sell has a bigger impact than just the lack of buying, right? They have settled it. It's a little deceptive, but they have definitely settled into a hole here at 09.5 for the last really 10 minutes. Though there are hints of something going on in the 30-year. This could be my, if I want to take a reversal trade, I could do it here, but I might want to wait for like a false breakout. Getting a little sleepy again today. Well, that was a little bit of a... Hmm. Okay. That's curious. So we did right as I said that, I'm like, it's kind of been stuck. They moved out a little bit, and now when they're trying to come back into the range, there is an iceberg at 10.5 holding them. Again. Oh, this is really weird, guys. Okay. I am seeing some steepening in the curve on the 30-year end of it, but the 30-year has been seeing excessive buying and is being held at the bottom of this. So something very bizarre is going on in the spreads. This could get really interesting, guys. Okay, they did get through the 11. There was an iceberg, ticks back up. You doubt the VPOC will be at the low of the day in ZN. Dude, I'm not 100% sure what's going to happen here. I'm a little weirded out by the fact that I'm seeing the yield curve steepen, even though there's so much buying on the 30-year end of the curve. Like, the amount of buying that I'm seeing on the 30-year end of the curve is like becoming quite excessive, in fact. It does look like there is an effort to shove them back into the range. They're having a little bit of a difficult time getting it to happen, but I think it could work out for them. So the issue is I'm not quite sure I can sort out why you would want to buy it. So I think that the trade would be buy ZB, sell ZN, right? And see the ZB come up harder on a reversal or a steepener. If it was a steepener, I don't know why it would be a steepener, but like if you're buying ZB, it's probably a steepener, but it's not. ZB is at the low end and it's not going up. It's really weird. So what could happen? We could see them push here and the ZB snap back really hard. Like if they snap back, let's say 137, it could whipsaw back to 137. Similarly, the ZB could break the other way and we could see stop runs to the bottom. Either way, I think that the treasuries are set to do something interesting. The 5-year looks like it wants to lead the way back up, though. Octavius sees it too. You see it too, yeah, Octavius? This is doing something a little weird. For now, though, its last few ticks have kind of just been meh. Right? It's not going like we're ready for a trend. We do get oil inventories at the bottom of the hour, right? That's something that we might need to consider. So we're seeing buying in the 30-year. We're seeing buying in the 5-year. The 10-year, maybe we're seeing, but it's not too strong yet. Maybe if they were able to break above 12, we might see a more consistent change in the order flow, right? There's another uptick. Shying away from 12, though, I think. I know when I look at that and I see 1600, I'm kind of like, it's a little intimidating. But then I remember that, oh yeah, but the liquidity overall is just higher today. So 1600 actually isn't all that unusual or significant at all. My calibrations might take a little bit for my brain to recalibrate with the numbers, huh? 2 ticks up. The 30-year not really following it so far, though. If we did see the ZB whipsaw back, then that would flatten back out, right? Another iceberg at 11.5. S&P 500 making a bull run here. $6J seeing a relatively strong move here. Iceberg on the offer too at 12 in this 10-year. 10 minutes away from oil. They're able to clear it, but not a super strong bid following it up. Oh, that's a different... Wow. Wow. What the heck? You love it when you say, when you're looking at it, it's like, okay, so there's something about that tick. It ticked up, not very much of a bid, came back down. Yeah, okay, whatever. And then as soon as I say that, they slam it. Strong bid at 12 half pulls. They clear 12 half, and now 12 half is bid. So they shoved it through that line in the sand. Didn't have to wait too long for that one, right? Man, my numbers, my viewer numbers are going down. Did I do something wrong? I took a good, I got an okay entry and y'all hate that? What's the deal there? Y'all quitting right when it's getting interesting. I don't know. Sometimes when it gets interesting like that, then it just kind of dies down and I'm like, well, what the heck? But I do think something's going on here. Is it just a pullback? Is it a more significant push up? There's some good iceberging there, though, on it. That's very supportive. I would have liked to have seen it not come back down from 12 where they shoved it, though. Thinking back on it, that when they shoved it there at 12, I bet that further trade at 12 half was probably a bigger player puking, because it happened awfully fast. I don't think that they liked that. But that doesn't necessarily give us something positive to help us continue pushing up, right? And continue seeing the orders come in long. And so far in the 10-year, it's just sideways. There's an uptick in the 30-year. Did I not reset them right? Because why is my 30-year up to ES doing games? I think that rise from 35 to 40 was pretty solid, and that a little bit of a pullback in ES is in order, right? You did well with the corn. What did you do with the corn? So the chart in corn is a little perplexing to me, to be honest with you. I mean, at one point it looked like it was doing really well. It was like one of the best performing assets, but it looks like they got smacked down pretty hard since then. Yeah, you sold it. What was the sell? Here's the treasuries coming back. It looked like really good for a moment, but they come back. And the 30-year. This is, I don't know if I showed you guys full screen here on the stream, but look at that. That's a very, very strong buy in ZB in like very tight range. It's 11K in ZB bot over 3. It's really weird, right? Okay, now on that move lower in the 10-year, at least, a little bit more selling. ZB pushing lower. This could be like a retest and bounce, but I don't like what the volume did there in the 10-year at all. That move flattened a little bit, though. You don't get to see it too much in the 30-year, though. S&P 500 is pushing up again. Oh man, I didn't even realize it's only been 10 minutes. I've been so absorbed and interested in what this has been going on. I'm not only realizing that it's only been 10 minutes and that the oil stocks aren't out yet. Well, it's a little bit of a risk to be holding it here to oil stocks, but I think I can hold on another 20 seconds, yeah. Minus 3.282 million. So draw. That is going to make oil move, but it might not be enough. It's a much smaller change than what we've had recently, isn't it? Well, I'm not quite sure what to make of what the treasuries are doing here. It's not following the volume at all. It's not following the correlations at all. I can't explain this move. I guess that means I gotta puke it, huh? I should have puked it at 5, but well, oil, maybe oil will make a difference. That didn't seem right. Hold on a second. No, we're okay. All right, well. There's a couple of things I'm seeing here that don't make sense. Of course, I do still think, like, I knew that trade was a little bit of a risk, so I think that risking more than 5 on it was probably a bad idea. But the volume does not make much sense in the treasuries, for one thing. And then there's also things like corn is falling super hard here. That one doesn't really make sense. And like the thing is like the treasuries, they've all moved lower, but the Japanese yen hasn't moved lower. Yeah, I don't know. It does look like that this move was accompanied by a move lower in the dollar. So I think that means we have to say that the driver is the weaker dollar. Although I'm not sure why. Yields trading hawkishly. Well, so I think that oh geez. You gotta take that one, yep. Could have been a lot worse than what it was. No, the ES turned there too. Yeah. The ES is like, oh, wait, yields. That's not good. But I think that what just happened there kind of suggests pullback and further legs. It is a big, like if we come back, oh, do I have one? Maybe it's not. It seems to me to be like a really long range trend down, but according to my volatility metrics, it's not. Well, there was I don't know if I would read that one as a target, Octavius, because it was just like the previous low. What was that? Oh, 6.5 stack. Nah, I don't know if that's true. The Japanese yen is not reflecting the treasury move, but the dollar is. Like when the dollar, switch it over to this chart. So I have all of my cursors to line up to the same spot, so you can see the 6E kind of on the left center area. When the dollar started turning lower, that's when the treasuries all took another dip lower as well. Okay. Generally speaking, the dollar index will be positively correlated with the treasury prices. So the more dollars there are out there, the more money that is coming to the US, in other words, the more money there is to buy treasuries. Because that typically, if they move their dollars if they move their money into US dollars, they're likely to put it into treasuries, and so the treasuries will rise with it. So if the dollar is going down, then we should expect to see the treasuries go down with it as well. The correlations don't always work that way, but that is the macroeconomic force that would cause that, right? But if it's hawkish sentiment occurs, it's a yeah, because that could be the dollar gets stronger relative to other currencies, but interest rates are getting higher. Correct. I think that last trade, it was a real gamble. I didn't really know which way it was going to go, but I think it was worth taking a gamble on that just because it's such an extremely unusual aberration in the market, you know? But maybe I should have been trying to bet the other way just based on the trend and the macro force continuing, right? Expecting a reversal there probably didn't make much sense. No. I think that if there was going to be a reversal anywhere, it was there. And you know what? I did get a little bit of positive. Like the entry on it was fine and everything. They've definitely run into something here at 07, even though they're still selling into it. So it looks like that even though there's still a lot of selling coming into the 10-year, that there's a liquidity hole there. So in fact, I'll take it here in the 10-year. Just as I was saying, hey, let's try and just trade the pullbacks a little bit. 6.5 is probably a really good spot to try that trade. So I would assume which numbers. I don't know if this drive is being driven by any kind of economic release or anything. The move kind of started before oil. Well, oil did move. I don't know. No, that one doesn't make much sense. Hmm. I suppose that the theory that they were front running oil is possible. So you could say that maybe they knew that oil was going to fall there. And if oil is weaker, then the petrodollar is weaker. And then that means less demand for treasuries. Maybe. Oh, see, that one worked out perfect. I need to watch that one a little bit more. I think that there's a fat tail on what I just did there, but I could probably get away with that one most of the time. In fact, it's early enough that I think I will try doing it again. Don't you think durable goods had some reflection in that? I mean, I don't know. There wasn't like any strong initial reaction to it. Core durable goods 0 versus 0.8. I don't know. So you can very clearly on this one see the hole at 07, right? But the sell flow, particularly in the 10 years, looks pretty strong. I mean, it was about 15,000 contracts since that trade started. Yeah. Come on. Yep. The issue with that one is that you will get that. Sometimes you will get that situation where it is just a really strong flow and they'll break it out, right? So you really would want to avoid doing that when you've gotten into the situation where the market is just like broken. You really want to do it when like the liquidity is truly exhausted and they're just stuck in a spot. But I think that one was a pretty clear situation where we could take advantage of that. Maybe I should be trying to do that one more. I think the reason why I've typically ignored that one is because it is a little bit counter trend. Like I could also try selling 07.5 and taking it off at the center, but it's a lot harder to get filled at 07.5. Keeping an eye on, so the dollar is reversing, but now the treasury is not as responsive to it. Okay, new theory. The volume that we're getting in the treasuries is being deceptive because of rollover week. Maybe that large trade that we saw in the 30-year that is really perplexing to me, perhaps that was because somebody was like closing out a short trade, right? I think that my natural inclination is to think that that is supportive of another leg lower. I'm kind of sitting here like wanting another leg lower, but I actually think that it could be the opposite, that it could make it easier for us to get a leg back up, especially after the way that they slipped through there. Thought I heard my name, but I don't think we actually did. That was quite the change there. That flow makes me really tempted to go short for whatever reason. I think that your mind will get into this idea that like, oh, it moved, so I want to move with it. But I think there's still a pretty big liquidity hole at 07. That might make it difficult, right? You know, like the way the ES is trading, Captain Price? I mean, it's ES. I keep trying to tell you guys, but it's ES. The ES ain't as great as everybody says. I think it's still summer. No, like numbers still kind of suggest that it's summer. It was interesting. We were getting a lot of views at the beginning. And then I started talking about how bad of an idea student debt was, and they disappeared. It must have been like all the kids didn't want to hear that. That's okay. Now, what's this? Okay, now I'm really confused, to be honest with you. I'm really extra confused. Because, again, we were saying, okay, so the thing that it must be that we're looking for theories about what were driving those moves, right? And the only thing that really looked correlated was the dollar. So we thought maybe it has to do with European flows in the dollar and stuff like that, right? Okay, well, the dollar has just made another move lower, and the treasuries are actually recovering. So that's not supporting evidence of that one. So now I'm to our best theory is that the order flow is just not very helpful at the moment because rollover. That's my I think that's my best theory at the moment. Fine to cancel. Well, I mean, listen, if you're a kid, you probably think that canceling student debt is great. Yes, I would like. This is the man. I got to be honest with you. I really don't like this move. Like, there's moves that, you know, a politician will make that, you know, it's like, oh, I don't like that. And, you know, differences over policy and things like that. But this is a move that I really feel will have a strongly negative impact on the social fabric of American society. And I don't know if there's any going back from it. Like, you know, a Democrat is probably thinking, well, I hope that this works out and it stimulates the economy and that people say, yes, we should cancel all student debt and that they keep going further, right? But that just sounds horrific to me, because what will happen is the cost of education will just keep going up, you know? So I think that the kids probably overwhelmingly like this move, but I don't think it's actually a positive move for them. And like something else that you could see happen, you know, this might not hold, right? There's probably going to be a court case, and I think there's a really good chance that the Supreme Court smacks this down, right? But that doesn't mean that college prices couldn't rise in the meantime, right? So the net effect of this could actually be that it makes it even more difficult for you to get into school. You know what I mean? So I just think it's bad all around. But there's probably a younger audience that is more likely to come and step into a stream that's not going to want to hear it. I'm realizing now when I look at it, like, what is my stream? Like, what is it that makes us unique? Well, of course, it's order flow and treasuries is the thing that's really really stands out in your mind the most. You know, well, I don't know if I trade treasuries, so I'm going to go watch the people that are trading. Yes, sure, whatever. Have fun with that. Yes, ain't as great as they make it, as it's cracked out to be. Okay. But that's not what really truly makes the stream unique. Because, yeah, if you can do that and you're going to watch for a little while, you're not going to do that forever. You're going to stick around forever. It's going to be because of Seth, right? It's going to be because you enjoy listening to Seth. You enjoy talking to Seth. So what is it that actually makes Seth unique? I tell you, what makes Seth unique is strong adherence to a set of values. I stick to my values and I'm more adamant about it than most people, right? I'm not the chill guy. The chill guy just wants to do whatever to go along. He's going to compromise. That's not me. That's not me. I'm always thinking, it's probably subconscious, but I'm always thinking about what are the values, right? And what are those values? What are those values? Integrity, excellence, teamwork. What I'm discovering is that people don't value those things. That's what I'm discovering. People don't want to talk about teamwork. They want to stick it to the big guy. They don't want excellence. They want to do the bare minimum and try and get away with it, right? They don't want integrity. They want to get rich quick. Man, that's another little push there. Let's look at the volume on this. I know I did take one trade, but I don't think that I really have a strong bias here today. this kind of sets Friday up to be a wild day, right? Because what if the market is coming in here and hedging for the Federal Reserve to be really hawkish at Jackson Hole, and then Powell comes out and says, like, we're really concerned about the economy all of a sudden, and we're probably not going to hike rates anymore. You know, like the next one will probably do 50 basis points, and then that's going to be it, right? And all of this just flips the other way. That's not what I would like to see. That's not what I think is going to happen, but it's just like within the range of possibilities. That move, I'm going to take another sim trade, okay? I'll put a limit order there, and I'll mark it at 05. And I'll take it off at 7. That one looks to me like the one where it's like you see the liquidity hole and you get out, and then there's a push further only for it to snap back into the liquidity hole. Speculative trade. Very speculative trade, but let's just try it out. Might as well. Well, you know what? It's almost time for me to get going, but listen, folks. Society might not always value what's important. We want to think that the crowd is right, that the markets are right. But what I find again and again and again is that the markets are not really very efficient at all. And that we give them too much power over what we think about things. We really do. And there are many, many things that the world doesn't seem to value at the moment, but they really do matter. I think the one that bothers me the most right now is excellence. That people don't want to take pride in their work. People don't want to put in the extra effort. They don't want to say everything that I'm going to do is of top quality, right? They're going to say I'm going to do the bare minimum whenever I can get away with it. I don't think that that's a good way to live, because what happens is you're never able to achieve your best, right? You can't say, well, I'm going to play it easy, and then when it really matters, I'm going to turn it on. It doesn't work that way, right? Because really what happens is you don't have 100%, right? You want to go to 100%, but then because you're not practiced on it, you can get 95%. Whereas if you're going 100% all the time, you know, when it really matters, you can put out 120. You know, like your ability to put out quality content, right, only increases with the consistency with which you put that effort in. And that's why excellence should be an everyday exercise. Your ability to do things excellently is a skill that you have to develop every day. And I do not feel that society and the young kids today seem to value that. I can see it when I put out content about that. They're less interested in it versus if I attack the Federal Reserve, right? But I don't think that there's anything else you could do right now that'll help you more. So I'm going to leave you with that. Continue being excellent. Stay profitable. Or at least don't blow it all. Okay? Because Friday is going to be a pretty big day, I think.